It's Wednesday, March 5th, and we're coming to you today with an impact report. This is going to be our first impact report in the second season of Markets with Megan. It's a report to keep you more up to date on some of the headline news that's coming out, especially when we're seeing volatility in the market. Please, if you like this podcast, subscribe, hit the alarm bell, send it to friends or colleagues. But let's dig into what's impacting the markets right now. First of all, this has a lot to do with tariffs. So let's just do a very quick timeline where we are with tariffs. On February 1st, as campaigned and promised, President Trump put on tariffs or imposed tariffs on both Mexico, Canada, and China. This is because of their part with the immigration crisis as well as the fentanyl crisis. Very quickly, Mexico and Canada responded with willingness to work with the Trump administration, and there was a 30-day pause in this. Well, last Thursday, when Trump was asked about the negotiations going between Mexico and Canada, he said that at that point, the negotiations weren't nearly getting as far as he'd like, and the tariffs were going into effect March 4th. So now here we are, and the markets have been crazy for the past few days. Volatility has surged, and where we are from the tariff perspective is that Mexico has, instead of implementing retaliatory tariffs, has said we'll have a call with Trump before we go forward with any retaliatory tariffs. Canada slapped yesterday with retaliatory tariffs, and the market didn't like this. However, same thing. Trudeau is expected to talk to the Trump administration in the coming days. China announced tariffs on agricultural goods that would start next week. So what's a little bit interesting here is some of these retaliatory tariffs. So Canada, for example, they said that they would start now with a small portion, but then the rest of it would go into effect later this month. So they're almost giving themselves a little leeway as well to try and push some of these negotiations forward. So why are we seeing, volatility in the equity markets up 40% year to date? Obviously the tariffs, but it's not just the tariffs. Trump campaigned on making disruptions to how government's been operated. We've seen that with the DOJ committee, and he was very adamant about laying the line when it comes to from the tariff perspective. So we knew he'd be a disruptor. I think what's surprising investors and causing the volatility is just at the speed at which that he is implementing so many changes. People don't like rapid changes and uncertainty, and Trump's come in the first 6 weeks and implemented quite a bit from what he has campaigned on. The second thing is this is happening at the very same time that the economic data is weakening. We knew it was going to weaken coming into the first quarter, but we're seeing some pretty weak numbers that's actually resulted in the Atlanta Federal Reserve to cut their GDP forecast for the first quarter down to minus 2.8%. It was as high as positive 3% just at the beginning of February. So you got the Trump administration's policies, you have the slowing in economic growth, valuations coming in this year were pricing in perfection. They weren't pricing in any of this uncertainty. And we're seeing that valuations are starting to get a little bit more realistic, specifically in the equity market. We're also finally seeing that we're getting some realistic outlooks for earnings. So the S&P 500, for example, we've seen the earnings estimates come down by about 3% year to date. We still think there's more to that. So we're not advocating going in and buying aggressively in the S&P 500. Even though we have had a bit of a pullback, still only about 5% pullback in the market. We think we'll get further downgrade there, but the earnings growth estimate for this year is now about 11%, and that's going to be slightly lower than what the earnings growth was in 24, which was 15%. So what do we think going forward? As we mentioned, from a tariff perspective and political perspective, get used to this being part of the headlines, but don't react from a market perspective because of these headlines. Because as we've mentioned, these tariffs are very fluid. What they're coming forward with sometimes is a negotiating tactic, sometimes it's a scare tactic, and they're obviously the Canada and Mexico are working with the U.S. They want to find a good solution here. We don't know how much further this will go. The biggest risk from an economic standpoint is inflation. The Fed's going to be watching that. We have had some upticks in inflation. We'll watch that closely. There's been some upticks in the underlying components in inflation, like in manufacturing and services, that are worth monitoring. There are certain areas of the equity market. If you have cash on the sidelines, start looking at some of these areas. Look at small and mid-cap stocks. Take a look at international. These might be a little bit more isolated from the domestic situation that's going on here in the U.S. That's all we have today with this Impact Edition. Again, it's a new thing we're rolling out for the season 2, and we'll be back, obviously, from a political standpoint with many more of these that are moving so quickly. If you'd like a further history of our podcast, you can go to marketswithmegan.fm.